It is Monday, February 24th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. It was a very fun get your ass kicked at Jiu-Jitsu Monday. Not a whole lot of ass kicking, not a whole lot of sparring going on, mostly technique and repetitions, just the way I like it. I mean, not that I don't like applying it, but you know what? I really like hammering it down in my skull before I have an opportunity or a circumstance where I'm required to use it. And so, yeah, today what we were going through is kind of a pass from the a guard pass from on top, of course. But it was a little bit interesting in the grips. It was like you get into mission control position, and then you kind of put your knee like right in the middle of their chest. And the way that I was doing it, I don't know if it was right per se, but it felt right to me. And what I was doing on it was this, where I get my shin up against my opponent's left hamstring with my right foot. And then they've got their foot on my left hip. I circumvent that to the inside, kind of push it down and step out and run over it, and then tuck it down. And then crouch as low as I can possibly go on my opponent, and finalize that by gripping both lapels, or both sections of the collar rather, and pulling myself in really, really tight to my opponent. And then, of course, they're going to be trying to force out from that, right? And trying to grip my arms and get free of it. Well, this particular technique required grabbing onto one of my opponent's sleeves, gi sleeves, and extending my arm outward. And so I was doing that from that position. And so, they reach up to grab it, and you curl around and you grab the sleeve, and straighten out the arm. And then for the next position, what I was doing on it is I was then transitioning, because you gotta transition your grip on your right hand from the left lapel to the right lapel and get that cross collar choke potential in there, And so from there, what I was doing is then I would really put down the pressure on that side, and then bring the knee forward and kind of hook it around my opponent's thigh, and then kind of sneaking it back around after I got my leg around it. And I felt like that was an easier way to go about it, because like when I have both of my opponent's collars, they can't really do anything off of their shoulders, because I've got their shoulders up off the ground, and I've got them in kind of this fetal position. And so, switching the grip from the one side, or two grips, to one grip in that position, it seems like, I've got my body weight on them enough to where I can keep them compressed, after I've broken down that posture, or their ability to push me away with their legs. That's the time when I want to do that collar switch. And I don't know if the instructor was going for just a straight disengagement on that first, or if it was a switch on just a free balling switch. But anyway, I found that by doing it that way, I had all the time in the world, or at least more time than normal, to switch the grip over to the other side. And even that, I felt like it kept my opponent even in tighter. And with the knee already past the thighs on my opponent's chest, I felt like that was just a real clean transition, just to hook it around and then push the hips, back out. And it kind of sets up for a few armbar opportunities there, as well as like a Kimura or even an Americana opportunity. But I liked it a lot. It was a nice, from like the bullfight position. It was a nice way in, and it felt like a really powerful guard pass. But yeah, so we concentrated quite a bit on that, and I'm trying to think of what the other technique was, because we only did like 2, but like I said, we did a shit ton of reps, and we were swapping opponents and stuff like that, and so we were getting an opportunity to try it out on more than one body style, or one body shape rather. But anyway, yeah, it was very productive. Not a lot of sparring, or actually no sparring. And so I was only mildly disappointed with that, but only mildly. Like I said, if you don't work on your technique, you got nothing to bring to sparring. So, you got to take that time to really put in your reps. Get your technique nice and clean and flowing for you. Anyway, let's go ahead and throw down with some music. I know that was kind of a short synopsis for the class, but like I said, it was relatively concentrated. A lot more reps than normal, and I felt like it was a really good transition. Anyway, let's go ahead and throw down a little bit of music. Some body count to begin with. Ski Mask Way here on Coin Metal. First Dance. And that was Prong with The Banishment. Haven't played that one in a long time. That was off of Power of the Damager. That was like six albums ago, maybe at least 5. Let's see. There was Power of the Damager. Then I'm trying to think. Power of the Damager, Ruining Lives, but that was after Carved into Stone, and then 0 Days, and there was another one in there. No Absolutes. So let's see, 1, 2, 3, at least 4 albums. But yeah, very prolific, Mr. Tommy Victor. He's due for one any time now, I'm sure. I'm sure if he's not, like, recording it, that he's at least writing it. And just the way the man rolls, he's been pretty consistently busy, either touring or working on his own stuff, or on somebody else's stuff, or touring for somebody else. Just a really busy guy. But anyway, as far as what we're going to get into today, I hate being so self-referential on this show, but it seems like I'm about maybe 2 months to 2 years ahead on my diagnosis of stuff and how it actually plays out. And I think we read the EOS white paper on this show, and at the time, there was concern about vote buying. And I had suggested at the time that it would become pretty much de facto like operation, or at least it would become an issue on EOS, because there wasn't enough incentive not to, So anyway, here it is. It's on Coindesk.com. On EOS blockchain, vote buying is business as usual. And this is authored February 24th at 5 UTC, updated February 24th, 2020 at 1521 UTC. And let's see, and this is by Brady Dale. So yes, penis. Buying votes is a big no-no in traditional democracies, but on the world's 8th largest blockchain, it's become an accepted way of doing business. A new service makes it easier for EOS block producers, the nodes elected by holders of the cryptocurrency, to validate transactions on the network, to share their block rewards with those who voted for them. The service, known as GenPool, was introduced this month by EOS, which itself is a block producer candidate. Back when EOS.io, the software powering the $33.7 billion EOS chain, was just an idea, the crypto community debated whether delegated proof of stake, or DPoS, would lead to validation candidates effectively bribing users to support them. DPoS is a consensus mechanism that limits the number of node validators to a fixed set. Early on, the EOS community believed it could prevent such activity. Now the community is all in on what proponents call, quote, voter rebates. Quote, the GenPool platform is a zero barrier to entry-free market market ecosystem, connecting proxy owners with voters that are looking to support quality block producers, BPs, while being rewarded with a percentage of the additional BP income, GenerEOS said in a Medium post announcing the service. Let's right-click on that. GenerEOS's Tim Weston declined an interview with CoinDesk. While similar services have launched in Asia, GenPool appears to be the first in the English-speaking EOS world explicitly designed to help token holders find the best payouts for their votes from block producers. Like Bitcoin miners, EOS block producers are rewarded with freshly minted cryptocurrency for recording transactions on the public ledger. In short, GenPool lets EOS holders get paid to participate in governance. To critics, this fulfills long-standing fears that in a system where governance is delegated, that the richest will dominate. Permitting payments makes it even easier for the wealthiest to cement their position. There is nothing stopping a validator from acting as if it were more than one entity, allowing whales to hold multiple spots on the governing council of block producers, effectively mounting a civil attack, the research team at the Binance Cryptocurrency Exchange wrote in a report released February 18th. A single actor may register multiple block producer accounts and multiply their voting weight at a negligible cost, the report said. Quote, simultaneously having multiple BP entities always allows that actor to allocate more block rewards to voters, increasing the competitiveness of the underlying actor. Binance stopped withdrawals of EOS tokens in late January when it saw instability on the network, possibly due to upgrades to the latest version of the EOS.io software released by Block 1. Other exchanges, such as Upbit and OKEX, paused withdrawals at the time. What are proxies? GenPool will probably sound a little convoluted to those who aren't well versed in EOS, so hang tight. To recap, every EOS holder has the option to stake their tokens to the vote for block producers, the entities that validate transactions on the network, and ultimately hold all power over the code changes, even wallet validity. In fact, getting enough votes staked was the big holdup for launching EOS after Block 1 released the EOS.io software. Each holder can vote up to 30 block producers, but they don't have to. Votes are allocated in proportion to the amount of currency the voter holds. If someone has 5 EOS and stakes it all to vote, each block producer candidate they vote for gets 5 votes, whether the holder picked 3, 7, or 17 of them. These votes run continuously, so a block producer can be in, out again in 10 minutes later, and in again 10 minutes after that. But deciding on 30 entities to vote for is hard. Hence, voter proxies have arisen on EOS. These services choose a slate of BP candidates to vote for, and voters can simply point their EOS at the proxy. Because the proxies get rewards when they vote for BPs who share their inflation rewards, they can in turn share those rewards with voters who back them. GenPool is going one step further, making it easy to find proxies with attractive rewards, and other attributes that the voter might be looking for, such as fee, philosophy, stake volume, and etc. Against it than for it. When EOS was first getting off the ground, an arduous process CoinDesk covered closely in 2018, the early participants spent a lot of time coming up with a constitution to govern the ecosystem. That draft constitution banned vote buying and reflected a consensus among the grassroots organizations that launched EOS. But EOS launched without incorporating any governance process into its code beyond picking BPs. When the blockchain went up, the whales rolled in and the Constitution was proven to be a dead letter from the jump. In late 2018, vote buying made for a mild scandal on EOS. The following year, EOS dropped the idea of a constitution for an end-user license agreement, with no mention of vote buying at all. Today, vote buying is not only tolerated, it's normal. Colin Talks Crypto, a pseudonymous YouTuber and proxy leader who is long EOS but critical of its current governance, created a voting proxy specifically to fight vote buying. But in a video released in September, he acknowledged the realities of vote buying and announced he was creating a second proxy that supported the best block producer that buys votes. Brendan Bloomer, the CEO of Block One, which created the software that runs EOS blockchain, has also come out in favor of vote buying. Quote, voter rebates just drive value back to token holders, Bloomer tweeted earlier this month. Quote, I'm a huge supporter. As CoinDesk has previously reported, Block One sits on such a large amount of tokens that it could completely change the makeup of the voting structure, but so far it hasn't voted on governance participants. However, Bloomer tweeted February 19th, suggesting the company could start voting its tokens this year. B1 voting is coming, he wrote. We're working towards the establishment of a non-profit entity that will give token holders another voting option and will work to redefine public blockchain viability and competitiveness. It is what it is. The general consensus of crypto thought leaders polled by CoinDesk seems to be this: vote buying in blockchain governance is likely inevitable. CoinShares Chief Strategy Officer Meltem Demiors called crypto governance itself a hot mess, but said a service to help manage the buying and selling of votes was better than an opaque market. Of the idea of a service that makes bidding out votes easy, she wrote, quote, great, let's set a transparent price for governance. Quote, collusion, coercion, manipulation, lobbying, bribing, and gerrymandering are part and parcel to the process of modern democracies. It would be foolish to believe that crypto governance would be absent of these forces, she told CoinDesk, echoing similar comments from a year ago. Spencer Bogart of the Blockchain Capital sounded similarly resigned to the situation, telling CoinDesk, quote, I think most, if not all, on-chain governance schemes will eventually amount to implicit or explicit vote-buying schemes, so it may be in EOS's interest to simply embrace this fact rather than resist it. Yeah, I don't think so either. I don't think so. Bogart, it should be noted, has been skeptical of EOS since before its launch. Joshua Gans, an economist who's done work on token economics, sees corrosive second-order effects of vote buying. When it becomes normal, he wrote, quote, there is no incentive to really learn about whether someone is a trustworthy node operator and, moreover, there is no payback to being trustworthy. You earn as much as you pay out just to be a node. But He conceded that it could all still work out. Quote, "The question is whether all of this is bad. After all, the network is being operated and costs are being covered," he wrote. Vitalik vindicated. For the record, Vitalik Buterin called all of this the Ethereum creator. He called all of this. The Ethereum creator weighed in on what he saw as the inevitable vote buying to come on EOS in a March 2018 post titled, quote, "Governance Part 2. Plutocracy is still bad." "Bribery is in fact bad," Buterin wrote. "There are actually people who dispute this claim. The usual argument has something to do with market efficiency." Yeah, we weren't willing to sacrifice the security of our funds for market efficiency. Otherwise, we would have just stuck with Visa. He argued that vote buying led to centralization in ways that just imitated the old economy crypto was meant to upend. Goddamn right. Quote, "The average voter has only a very small chance of impacting which delegates get selected. Their incentive is to vote for whoever offers the highest and most reliable bribe," he wrote. Indeed, the only real power EOS holders have on the network is to vote block producers in or out. On the Tezos blockchain, by contrast, regular holders vote on code changes. On EOS, even updates are wholly the purview of block producers. That said, voters can kick out BPs at any time as described above, but there are a lot of voters and only a few BPs, a real imbalance in the case of coordination. The heart of Buterin's prediction about vote buying comes down to cartels. He described how delegate candidates will inevitably start offering better and better terms to voters to win votes, until at some point a block forms to stabilize the instability. Worse, as Binance's report describes, there can even be single-entity cartels, organizations that take up more than one slot on the list of block producers by pretending to be multiple entities. Rumors of cartels on EOS abound, but clear evidence hasn't yet come to light. Meanwhile, evidence of vote buying has, so that even its discontents have come to accept it. As long as the code allows it, people will do it. And also as long as the incentives are there, people will do it. Quote, "Playing by the rules right now is the best we can do on EOS until we can actually fix governance," Talks Crypto said in his video. Yeah, there really isn't any curing it. The reality, I think, is put right into it there. Let's see here. Where is it? Yeah, the average voter has only a very small chance of impacting which delegates get selected. Their incentive is to vote for whoever offers the highest and most reliable bribe. That was Vitalik Buterin. I believe he's absolutely correct there. You know, when you maladjust the incentives will direct how people operate. You know, and it's one of the valuing things. I mean, when you're valuing a cryptocurrency, you have to weigh its morals, its ethics. And if there's greater incentive to operate in a way that's not necessarily beneficial to the entire network at large, but only a single entity that owns multiple slots, I think it's just as bad as if you're on Visa. You got to trust that they're going to be operating enough in your best interest not to rip you off. And then, like I said, you're back to trust again. You're right back to Visa. You're right back to a third party deciding the monetary policy of the coins that you're holding. This is why I've never agreed with DPoS. because I'm willing to predict here. There's already legislation either in the books or on a shelf waiting to go in the books concerning validators. That they want to license validators. And the language is very specific. It does talk about quote-unquote validators. And that matters with regard to DPoS and, of course, things like oracles on the Lightning Network. Because these people are or these entities, rather, how many people are involved, I couldn't tell you. But these entities are providing a trusted service, a trusted third-party service, where they're the ones monitoring all the little payment channels on Lightning Network, and they're the ones validating all the blocks that are coming in on the EOS network. And so this is a trusted position. So if their incentives should be perverted in any way, shape, or form, it opens up the possibility that your trust is going to be abused. Because too much of it is being placed in one individual or one entity. So the threats that they're talking about, it hasn't really changed. At some point or another, I would predict that if these coins or these blockchains started losing interest, that people were shifting away from them and dedicating their hardware to other operations and other projects, that you'll see things like a single entity owning the vast majority of the nodes, a vast majority of the validating nodes. And this entity will end up being a proxy for an existing legacy entity, or one that's maybe funded by them in some way, shape, or form. But more or less, it'll be the same as it ever was. And it's sad to me because Bitcoin exists to eliminate the necessity to even have a third party. So the fact that they're just changing the conditions by which a third party can fuck you over, or lower the likelihood or capabilities or ability to do so, and I don't think that's enough. There's big enough risks in Bitcoin, and if these types of perversions of the incentive structure were to be brought to Bitcoin, where a situation where mining itself was more or less disincentivized because it costs more to mine coins than it's worth to mine them. Like your initial coins right now, I think like the first spends on them is like $13,000 a coin or some shit like that, or that's what I heard anyway. But that shows you that there is a asymmetry between the market price and the open price, like the real price for the coins and the exchange price for the coins. But yeah, I think all of this stuff is going to end up shaking out when the incentive structure is gamed. It's like with regard to EOS, I think that we see the potential for it to be perverted in its existing structure. With regard to Bitcoin, I believe it's only a matter of time, meaning that if enough transactions were happening via Lightning Network and other off-chain payment options, that we will see the same thing happen with Bitcoin, where it won't be worth it to continue to mine it because the block incentive itself has gone down. The block reward itself has gone down, and the fees aren't enough to compensate the miners to continue operating on that network. And if the government or say Fidelity were to be operating enough of the Bitcoin blockchain or mining enough of it, that they would be in a similar position. And again, this is all just a tweak on the incentive structure. But pretty soon it's going to be worth it for us to be investing ourselves in these systems. if it isn't already. I've looked on CoinWars. I haven't looked lately, but I would imagine that Bitcoin is probably becoming better to mine. That the incentive is increasing to mine. And I expect that it will continue to increase. When Bitcoin gets up to $100,000, and I say when, because it really isn't an if thing. It is a when thing. When it takes $100,000 to buy a Bitcoin, if electricity is cheap enough and the hardware is cheap enough, people will invest themselves in mining cryptocurrency. If not Bitcoin, something else. But when we do see this tweak where it's not a great enough incentive for people to mine Bitcoin, we're going to see two things. Number one, I think that we will see a centralization of mining by some government entity, and I believe that we'll see some sort of abuse of that market position because they can't fucking help themselves. They have to lie. And when they do, they will spoil it. That's number one. Number two, I believe that before that happens, they're going to inspire greater interest in people investing their time and effort in mining and servicing altcoins instead. And that'll create a counterbalance to this negative effect on Bitcoin itself. But it's a long race. Bitcoin is basically, in my mind at least, I believe it's a game. And it's a 140-year-long game. And so we've got a long way to go. We're going to see some adjustments in people's attitudes. And I think at one point or another it'll become too expensive for even government to mine it. That we'll see this transition where government or government-owned proxy or bank-owned proxy is going to dominate the hashing power on the Bitcoin network. They will abuse this position with some sort of tweak on the protocol or whatever, and they will sour it for a lot of people. But, of course, we will revert it back after that happens. Anyway, let's go ahead and throw back down into some music. And as far as where to go, well, I think this one works. Future Breed Machine by Meshuggah, here on Coin Metal. And that was Faith No More with Falling to Pieces. And so, where we're going to go next? That one article actually gave me some stuff to build on, and so I'm just going to go with it. And this next one here I got is on Medium.com, introducing Genpool.io, the first EOS voter rewards exchange. And this is by Jenner EOS, and it was authored February 3rd. No idea of genitalia. Jenner EOS are proud to announce the launch of the first EOS voter rewards exchange, Genpool.io. Pioneered by EOS Nation and soon followed by Colin Talks Crypto and Vote for Value, rewards proxies have become an accepted part of EOS governance. But up until now, running a rewards proxy required technical know-how, development time, and setup of your own back-end infrastructure. Genpool.io is here to change this. The Genpool platform is a zero barrier to entry free market ecosystem, connecting proxy owners with voters that are looking to support quality block producers, BPs, while being rewarded with a percentage of the additional BP income. Genpool believes in the power of the free market versus in the hands of a few. This means that on the Genpool platform, anyone can start a rewards proxy or convert an existing proxy over to a rewards proxy in seconds. Giving everyone access to these features will create wider voting participation and generate opportunities we haven't yet seen. Proxies are an underutilized resource on the EOS market mainnet. After developing the rewards proxy for Colin Talks Crypto, we have firsthand witnessed the positive impact and exposure he creates for the network and how much time he pours into the unpaid role. The Genpool platform does not only focus on voter rewards, but also allows proxy owners to monetize their hard work and promotion by setting a proxy fee. This allows influencers, EOS whales, and projects a way to monetize their reach, stake, or community, which will generate more publicity for EOS overall. Overview. The platform is designed for 3 types of users. Number 1, voters wanting to vote for a rewards proxy and get a return. Number 2, proxy owners who want to register as a rewards proxy and earn income. Number 3, block producers who want to register with a rewards proxy to gain votes. If you are a voter, then the homepage of genpool.io is all you need. Proxy owners and block producers navigate their respective dashboard via the menu. We have created separate help sections for the above-mentioned user groups. FAQ for voters, FAQ for proxies, FAQ for block producers. Features. Voter rewards. Proxy sets a percentage of vote rewards, i.e. a percentage of VPay from block producers that go to the voters. This allows proxy owners to still allow a portion of profit for the block producers. Example, a BP has 50 million EOS votes, which yields 102.5 EOS daily in VPay. Now let's assume a rewards proxy has 12 million EOS assigned to the proxy. If the rewards proxy voted for the BP, then it would increase its vote weight to 62 million EOS, which would yield around 126.5 EOS daily. The rewards proxy vote increased the BP's daily yield by 24 EOS. The proxy can set a percentage, let's assume 80%. Therefore, 80% of this added yield will be returned to voters as a reward, 19.2 EOS. At the time, the BP's profit increases by the remaining 4.8 EOS. This allows BPs to still earn a 20% profit from the proxy vote. Proxy fee. Proxy owners can get paid for their service. A fee percentage of rewards can be set and sent to themselves on a daily basis. This allows proxy owners to monetize their proxy and opens the doors to major social influencers looking to monetize their channels and contributions. Automated rewards. Rewards will be sent to voters and proxy owners daily. There will be no claim process or complicated steps. Voters will simply assign their vote to a proxy how they normally would, and they will receive rewards into their voting account. Roadmap. Automation. Auto-voting and unvoting. Automated vote selection criteria like API endpoints, missed rounds, alternation of BPs, etc. I think that's alteration, or maybe alternation, I don't know. Anyway, referrals. Allowing wallets, block explorers, and users incentives for referring votes or new proxies onto the platform. Launch of Genpool Native Token. Our native tokens will hold many features such as time-based loyalty rewards for assigning to proxies on the platform, along with games and lotteries. Staking rewards for other tokens and blockchains. We hope you enjoy using this platform as much as we did building it. We cannot wait to see the positive impact it has for the network. We hope to see you as one of the first adopters. About us, GenEOS is a social enterprise standby EOS block producer with a mission of promoting and supporting scalable and highly reliable block production whilst giving block rewards to social causes. Based out of Sydney, Australia, GenEOS is founded by a team of like-minded blockchain enthusiasts with diverse backgrounds and a passion to make a difference in the world and fostering the spirit of generosity by giving back. Please remember to vote for us one GenEOS so we can keep working hard and add value to the EOS community. Well, let's see if there's any response. Oh, there's no responses to this. Oh, that's interesting. I don't know. I would have to look more into the EOS governance and whatnot. It's one thing to claim to be for generosity toward needy people and whatnot, but it's another to actually fulfill on it. And I think when we get to where we're actually using these currencies more as straight peer-to-peer cryptocurrencies, that we are going to see these kind of value metrics adjust people's participation in a particular cryptocurrency. And we might even see where Bitcoin loses some of its cred only due to the structure and the diversity of the network. If there aren't enough individual users such as you or me that are mining it too, then it will lose some social appeal. It's a bit like physical gold. While physical gold is worth something and it's cool to have, the limited number of people that you can turn it into cash with kind of confines the market, makes it a little more constrained and a little more difficult to transition monetary value or liquidity rather from one form to another. And this I think is going to be the same for a lot of these coins, where the reputation of their vote proxies and whatnot will reflect poorly on the coin, and maybe you never know. I could be talking out my butt, and in another 2 years, this could be one of the most popular cryptocurrencies on the planet. It can happen. But it is always a matter of how these projects actually express in the market. If all we're seeing is corruption on it, and we're seeing people do back favors for rolling back transactions or some shit like that, okay, then we are going to see people migrate from it. However, if being one of these proxies or being a block producer in and of yourself is profitable, people will participate in it. It's not enough just to sit on the sidelines and speculate on this stuff. You do have to actually put some real skin in the game. And in my mind, that includes participating on these networks as a node, as a miner, as an oracle, as a block producer, as a voter. That you should be expressing your will on these networks because they're available exactly for that. You can't do the same with the U.S. dollar. I mean, you got the Federal Reserve has the board of directors. I think there's like 13 banks and there's one director per each, and they all report to one centralized authority. I mean, come on now. And these are the people that are determining the monetary value of pretty much every currency out there, every fiat currency anyway. But let's get further into this. And we did read in that first article that Binance had made a commentary concerning the governance of EOS. And I am kind of eager to hear exactly what they have to say about it. And so here it is. Research.binance.com. Decentralization, governance, and EOS, a lost cause? Assessing the governance of EOS against the benefits of decentralization, such as collusion resistance. And this is by Binance Research Team, or Research Jonas, so yes, penis. And this is authored February 18th, 2020. And so we're not going to go through the key takeaways because that kind of takes away the point of reading the article. It is what cryptocurrencies do, or at least aspire to do. Oh, what? Come on now, don't do that to me. I guess I have to read through the key takeaways. Key takeaways: owing to its high market cap, EOS, a delegated proof-of-stakes consensus network, has oftentimes been picked out and labeled as a victim of its governance, where the largest EOS holders further consolidate their position and hold all the power. Bullet point 2, the notion of how decentralized governance of EOS may indeed be is best assessed by looking at proxies thereof. Bullet point 3, the assessment is conducted in a threefold manner, looking at the performance of EOS in regards to collusion resistance, fault tolerance, and attack resistance. Bullet point 4, in regards to collusion resistance, the insights are: sub-bullet 1, the governance of EOS lacks mechanisms to avoid or structure the process of vote trading. Bullet point 2, sub-bullet point rather, the incentive structure of EOS reinforces consolidation by promoting vote trading and selfish acts. Bullet point 3, or sub-bullet point rather, individual parties such as proxies or Block.1 have the influence to drastically change votes. In regards to fault tolerance, operational metrics that measure reliability and capability to react show that 2/3 of the exchanges operating as block producers had the worst performance among the 21 BPs. There were furthermore 2 incidents where failures occurred. In general, EOS problems seem to be enabled and aggravated by a number of issues such as low voter turnouts, little resistance to civil attacks, and coherently little transparency, the one token to 30 vote system, as well as the chargeback block rewards, or the changed block rewards. Lastly, in regards to block or attack resistance, it appears as if there were 2 clusters of block producers evidently displayed in correlations between voting patterns and regional distribution. Let's see here. There's a quote: "If the potential of a startup is proportionate to the size times the incompetence of its competitors, the most promising startup of all would be one that competed with national governments. It's not impossible. This is what cryptocurrencies do." And that's what Paul Graham, Y Combinator, has to say. It is what cryptocurrencies do, or at least aspire to do. There are various different approaches on how to coordinate and agree on the network status. For this reason, the governance of EOS will be singled out in the scope of this case study. After a brief general introduction to EOS, the concept of decentralization is introduced and subsequently tested against the governance of EOS. Number 1. Description of EOS and its governance. 1.1. Description of EOS. Block.1 raised more than $4.1 billion in a year-long ICO that ended in July 2017. This constitutes the largest ICO recorded, exceeding the second largest ICO of 2017, i.e. Filecoin, with $257 million by almost 16 times, and the second largest ICO across all time by 2.5 times. Subsequently, Block.one's product, EOS.io, officially launched on its mainnet on the 1st of June 2018. EOS is a third-generation blockchain. For more information on the applied methodology, refer to Chapter 2.1 of the report on the Telegram Open Network, and was quick to gain traction after the launch. The latter is also displayed in Chart 1, which shows the development of the USD-denominated EOS closing price from the 1st of June 2017 to the 10th of February 2020. And it looks like it's going up there at the end. Not only the price, but also the ecosystem of EOS was quick to grow. EOS now constitutes one of the most popular blockchains for dApp development. As of writing, data from dApp.review suggests that 676 dApps chose to build on EOS, a figure that is only exceeded by Tron, 693 dApps, and Ethereum, 2,195 apps. These EOS dApps are also being used, blah blah blah. In fact, their activity is far exceeding the activity of dApps on Tron or Ethereum. As of writing, dApp.review recorded almost 99%, or 32 million TXs, of all transactions that involve a smart contract of a dApp on EOS. The amount of respective transactions is one factor of magnitude higher for dApps on Tron, and that's 330,000 TXs, which is still more than double the amount of dApp TXs on Ethereum, and that's 150,000 TXs. This insight is even more surprising when including the number of users per chain. While EOS has almost 85,000 users 3 months ago, EOS now has the least amount of users, less than 10,000, among the three compared blockchains. Ethereum is clearly leading with the largest user base of 50,000 users, which is more than double the amount of Tron's users, 24,000 users. This proxy measurement for activity, transactions involving dApp smart contracts, can be interpreted in several ways that may give insights in regards to dApp complexity, as more complex dApps might leverage multiple smart contracts. dApps types, like games for example, are likely to require more frequent user interactions. Most relevant to the interpretation of this metric, however, the underlying technical infrastructure, unlike Ethereum, which still uses a proof of work consensus mechanism, EOS uses delegated proof of stake consensus DPoS mechanism. While DPoS enables higher network throughput, it comes at the cost of decreased decentralization, as it is based on the, quote, institutional reputation of a small set of actors. The EOS infrastructure uses a set of 21 delegates, also referred to as supernodes, that may vote on new blocks in a round-robin model. These delegates are elected by EOS token owners out of a large set of candidate block producers. Some block producers get rewarded per block validation. They have an incentive to get elected as a block producer, which puts them in direct competition for votes with each other. The block rewards are paid from annual token inflation. EOS token owners execute their vote for a certain block producer by staking their tokens for them for a period of 3 days. Votes, quote, decay over time and are void after 2 years. For votes to maintain a high vote strength, it is required to resubmit votes on a weekly basis. While token ownership and voting power generally increase linearly at a 1-to-1 ratio, it is possible to vote for up to 30 block producers simultaneously. Effectively, this means that one token may equal 30 votes. Besides voting rights, token owners get usually compensated with a pro rata share of the block rewards their block producer reaps, and they may similarly claim network resources such as RAM, CPU, and bandwidth, in jargon, net. To avoid an inefficient resource allocation from inactive hodling token owners that are not utilizing their allocated resources, additional market-driven allocation mechanisms have been introduced. 1.2 EOS, too centralized? Even though this particular problem of optimizing the resource utilization of the EOS network was overcome easily by stakeholder-driven innovation, other problems have turned out to be more persistent. In particular, one concern has consistently accompanied EOS from the initial ICO to the current state: the fear that EOS may be too centralized, as too few people own too many tokens. And this is by Weiss Crypto in 2019. Generally speaking, all blockchains have been touted to be, quote, prone to patterns of re-centralization. They are informally dominated by coalitions of powerful players within the cryptocurrency ecosystem who may violate basic rules of the blockchain community without accountability or sanction. To answer the question of EOS potentially being too centralized, one must start by defining the opaque concept of centralization. 1.3 Measuring decentralization. The definition and measurement of centralization have long garnered a lot of interest, especially in the early years of Bitcoin and crypto asset adoption. Being decentralized has been a guiding goalpost. Buterin's blog posts 1, 2, and 3 in 2017 kick-started a discussion that was coined by a less dogmatic and increasingly pragmatic stance towards the purpose and benefits of decentralization. Until then, the goal of being decentralized was considered an irrefutable necessity, a notion that is furthermore well represented in early debates about Bitcoin block size. For more information on this, refer for example to this Medium article, and it's got a Medium article. The majority of the discourse was not framed within a, quote, value from decentralization or cost-benefit perspective, but was categorically ideological. Buterin's efforts reinforce previously existing research efforts, such as the popular position paper, quote, on scaling decentralized blockchains in 2016, that attempted to rethink the design of blockchains by splitting them into parts network, consensus, storage, view, and side planes. The general idea of having identifiable subcomponents of blockchains was adopted and enriched by transferring the Gini coefficient concept into it. The Gini coefficient is the most common measurement of inequality, but is based on several conditions that drastically reduce its value in this context. Srinivasan in 2017 subsequently popularized the minimum Nakamoto coefficient that measures the Gini coefficient of subsystems to ultimately derive a total score on the equality of token ownership of a chosen crypto asset. This concept experienced wide popularity and was implemented in a public Python library and further developed in Minimum Nakamoto Coefficient 2.0. However, any attempt to quantify the level of centralization of a blockchain has rightfully been criticized as being flawed. Proposals such as minimum Nakamoto coefficient try to quantify exactly this, but run the risk of providing an illusion of measurability. And that's Walsh 2019. Instead of thus entertaining the vain effort of applying one of these well-intentioned frameworks onto EOS, EOS governance is best assessed by looking at proxies thereof. A proxy measurement can be understood as an indirect measurement of the subject of interest. Current status of EOS governance. 2.1 General Introduction. To reiterate on the core principles of EOS governance, 21 block producers, BPs, are elected by EOS token holders from a broader set of block producer candidates. These BPs follow and sign, in every transaction, a Ricardian constitution that now, quote, acts as a peer-to-peer end-user license agreement. In practice, however, EOS governance was already undergoing drastic changes. The first interim constitution of EOS was published in May 2018. The constitution was enforced by EOS Core Arbitration Forum, ECAF, which also served to settle disputes among EOS token owners, while the ECAF and its analog approach of requesting BPs to sign and follow endorsements attracted some criticism. Its purpose was to balance the influence of BPs. This is something that was deemed necessary, shown for example in circumstantial evidence that points to EOS users perceiving block producers as too powerful. And that's CF Reddit 2019. As one user put it, quote, block producers control all decisions made on EOS, from validating blocks to seizing funds from under your private key. Nonetheless, the BP EOS New York spurred previous efforts to discontinue the ECAF by publicly declaring not to follow ECAF decisions any longer. This followed two questionable incidents where, one, ECAF first ruled to freeze 27 accounts without providing any reasoning, CoinDesk 2018, and number two, a popular but fake ECAF ruling demanding the reversal of an EOS transaction. And that's CF Hoskinson 2018, but nonetheless represented a clear divergence from previously agreed upon code of conduct. The next development of EOS governance was coined by not only abandoning ECAF, but also replacing the Constitution with an EOS user license, EOS user agreement. Effectively, this means that at this point, all original guidelines of the governance of EOS have been substituted. The process of replacing the Constitution was, once again, fairly chaotic. The original proposal to replace the interim constitution with the EUA required a voter participation rate of 15%. However, it ended with a voter turnout of merely 2%. Nonetheless, EOS New York suggested to go ahead anyhow and receive support by 15 out of 21 of the BPs. Ever since, 21 elected BPs and the EUA are at the core of EOS governance. Some additional governance tools have recently been implemented, such as the EOS Enhancement Proposal and the BP System Upgrade Proposal, which have, however, a merely supportive function. With a better understanding of the current and former fundamentals of EOS governance, it is possible to move to the practical implementation thereof. The chosen way of doing this, to assess the supposedly greatest fear of EOS being, quote, too centralized in its governance. This will be done by testing EOS against 3 main goals of decentralization, Buterin 2017. Number 1, collusion resistance. Number 2, fault tolerance. Number 3, attack resistance. Number 1, collusion resistance describes the ease of system participants to organize in ways that benefit them at the expense of others. Arguably, this is thus the most relevant metric against which to assess EOS governance. A paper published by Whiteblock 2019 found that block producers have formalized incentives to collude. These incentives are originating in the substantial revenue from validating blocks and are only possible because of the following factors. Number 1, block rewards from inflation. Originally an annual inflation of 5%, was split to fund a community pool 4% and to fund block rewards 1%. It was, however, decided to discontinue the community pool and reduce the inflation to 1% to completely funnel it towards block producers and standby block producer spots. This further consolidated control of BPs as it effectively increases their revenue. 1 token, 30 votes. The ability to vote for 30 block producers with a single token facilitates vote trading and vote sharing incentives for the largest BPs. Effectively, the largest BPs may build a moat of votes by coordinating in networks of up to 30, respectively 21 parties. 3. Vulnerable to Sybil attacks. The current economic incentives and voting structure are very susceptible to Sybil attacks. A single actor may register multiple block producer accounts and multiply their voting weight at a negligible cost. Simultaneously, having multiple BP entries allows to allocate more block rewards to voters, increasing the competitiveness of the underlying actor, i.e. the mining pool. Number 4, the role of proxies further aggravates the threat by Sybil attacks. A proxy is entrusted to vote for BPs on behalf of EOS token holders. Proxies are usually led by community contributors that are deeply entrenched within the ecosystem. Allegedly, several proxies have been contacted by BPs to continue acting as front-facing intermediaries, but let the BP gain control over the votes in exchange for a monetary reward. Low voter turnouts. Similar to other systems requiring voter user participation, voting turnouts in EOS are generally low. This makes it easier for large individual players to coordinate and dominate votes, as their relative control over active tokens is higher than their control over all tokens. Last one, tokens stored on exchanges. Lastly, several custodial exchanges can vote with entrusted tokens, which also leads to a significant consolidation of voting rights. Within this setting, it is an economically rational agent must collude with others in order to maintain and maximize their profit, and this is CF, that was from reference Whiteblock 2019. This situation is further aggravated by an open, unregulated market for votes. Generally speaking, the process of vote buying is not inherently bad, as any purchase can only be done if the buying party values a vote more than the selling party, and thus has a stronger interest in expressing a position that is subjectively perceived as more relevant. However, it may lead to an aristocracy, as rich individuals are in a, quote, virtuous circle where they can amass an increasing amount of votes as they earn income from using them. Coherently, the 21 BP earn almost 7 times as much as other high-placed BP candidates. Average daily reward 978 EOS for the top 21 BPs versus 142 EOS for BP 31 to 51. Posner and Wheel, 2018, further assessed the subject of vote buying in a book titled, quote, Radical Markets, and suggests that votes should be subject to a cost function, where votes may indeed be tradable and purchasable, but using or purchasing them is coupled to a decreasing utility. In EOS, however, any such cost function is absent. The market for votes is furthermore very intransparent and structured via a lot of informal, quote, quid pro quo of BPs. It is nonetheless possible to conduct a basic assessment of voting patterns, which reveals the following picture. Number 2.2, voting patterns. Out of the original 21 block producers, only 5 of them are still producing blocks at all. One of the remaining BPs completely unregistered as a BP and stepped away from EOS, while the rest are in standby and not part of the top 21. This is indicative of the significant changes in EOS governance participants. Chart 2, for example, shows the distribution of all casted votes as of 7/2/2020. So July 2nd, rather. Interesting. The most apparent insight from this chart is that the largest 164 voters have 72% of the weight in regards to cast votes. Additionally, a large number of voters, 480,000, have less than 1 EOS staked and therefore very little impact. This preliminary insight indicatively displays the large influence of the largest EOS holders. Out of these 164 whales, 84% of them, 123, voted simultaneously for BPs, a figure that is considerably higher than the 52%, 38,858, of all accounts that chose BPs. One way to interpret this figure is that large EOS holders could simply be more attractive targets for vote trading schemes. A second notable voting pattern is to vote for the last 20 block producers. The votes around 20 BPs are also likely to originate from collusion and vote trading. The last insight is that many, presumably smaller votes, only voted for one BP. When it comes to BPs themselves, the following BPs are currently producing blocks. And it gives us a nice little chart. Chart 4 shows, for example, that the founding BP EOS Huobi pool has the largest amount of votes with 336 million votes. In comparison, the largest proxy, Colin T Crypto, controls roughly 10 million EOS, with the largest 21 proxies controlling over 94 million votes. Other than BPs, the overarching idea behind proxies is similar to representative democracies, where voters may decide to elect chosen individuals to act on their behalf. Even though this ignores the fact that at least 3 of these proxies, Bitfinex VP13, Bitfinex VP21, and Bitfinex VP33 are, for example, controlled by Bitfinex, it shows that proxies have considerable influence. This is especially clear when considering that for EOS Rapid Prod to become the largest BP, it would only require 13 million more EOS, and they're currently at just under 70 million USD or no, that would be at 70 million USD. Self-evidently, this analysis is nonetheless overly simplistic. 2.3. Fault tolerance. A theoretical definition of a number 2 fault tolerance may describe it as the number of failures a system can endure while maintaining its function. Having a high number of separate components, i.e. a high redundancy, generally increases fault tolerance. In line with the chosen methodology of observing outcomes, the fault tolerance of EOS can be assessed by looking for metrics or events that describe failures and the respective outcomes. There are 2 predominant examples of BP failures. Number 1, one BP failed to update the list of blacklisted accounts. The result of this failure was the loss of $7.2 million US. Even though these funds were later recovered by Huobi, the EOS blockchain showed no fault tolerance as the funds were mismanaged and only reappeared because of the actions of an external actor. Number 2, the second example relates to a bad allocation error that forced the nodes of several BPs to go offline. These BPs were only temporarily replaced after 30 minutes, leaving the EOS blockchain exposed by having a reduced amount of BPs. Besides these 2 high-profile events, BPs can be assessed on 2 additional metrics: reliability and compatibility. The reliability of the 21 block producers as of 10/2/2020 is displayed in Chart 4 via the block and round availability. These metrics describe the amount of produced blocks, i.e. completed rounds, divided by the scheduled amount of blocks/rewards. Blocks may not be produced or may be not produced for various reasons, and failure to do so may not always be the fault of the block producer. Hence, this metric gives a general idea of the availability of BPs, but must also be complemented with a metric that keeps BPs more accountable: round availability. A round is a series of 12 blocks. Missing 12 blocks in a row is thus likely the fault of the respective BP. The second metric to assess BPs is compatibility to react. This ability can be measured as the execution time of custom EOS contracts. On-chain data is gathered by EOS mechanics via a smart contract calculating Mersenne prime numbers. Except for Bitfinex, EOS Wiki, and EOS Huobi Pool, all 21 BPs have a low and consistent execution time, indicating a sufficient resource allocation to their activities as well as BPs. While it is interesting that 2 exchanges are amongst the least performant, i.e. invested, BPs, all of them, performed reasonably well on the metrics of reliability and compatibility to react. 2.4. Attack resistance. The last assessment of EOS governance targets the 3 attack resistance of EOS. This attack resistance can manifest in various ways, such as, for example, censoring attacks. Generally speaking, decentralized systems are supposedly more expensive to attack due to their lack of central points of failure. However, circumstantial evidence points to significant consolidations of the EOS network. EOS New York, for example, reported that one entity registered 6 different BPs. Similarly, many BPs are voting for themselves through proxies. Some of these proxies are openly associated to a particular BP. For example, Huobi has 5 proxies with a total of 5 million EOS. Big One has 15 proxies with a total of 1 million EOS, and Bitfinex has 13 proxies with a total number of 40 million EOS. Additionally, it appears as BPs may operate up to 50 different covert proxies. Another attack vector is of geographical nature. 1/3 of all block producers are based in China, and more than half of all block producers are based in Asia. There is thus a strong regional focus, which is similar to the geographic distribution of mining pools. Nonetheless, correlation analysis from EOS Authority suggests there are 2 major clusters. One that would be centered around EOS Authority and another around EOS Huobi pools. This insight mirrors the previously mentioned geographical divide. Lastly, the issue of attack resistance generally links back to the chapter on voting patterns, and in particular vote trading, as well as the influence of large token holders. Number 3. No immutable problems. EOS has a function called reg producer that is a mutually agreed upon guide to enforce on-chain standards among block producers. One BP submitted a referendum to update this contract and thus raise the bar for BPs. As any change must be implemented with approval from at least 15 out of 21 BPs, this update only received 13 out of 21 votes. It was destined not to get implemented. However, large proxies may change the ranking of candidate block producers by reallocating their votes. This is what happened in the previously described case and led to 2 candidate block producers moving up the ranking, becoming a BP, and thus obtaining voting rights. Subsequently, it can be concluded that BPs may have the sole decision-making power, but are nonetheless dependent on votes becoming and staying a BP. Large proxies and accounts thus have considerable influence. Similarly, the company launching EOS, Block.1, has over 96 million EOS and could theoretically use this any time to vote and change the order of BPs. To put this amount into perspective, Block.1 holds almost 10 times as much EOS as the proxy that moved the ranking of 7 BPs and BP candidates. Similarly, the holdings of Block.1 and the next 4 largest EOS holders already amount to 1/4 of the entire circulating supply. After promising approach to improving EOS governance could relate to formalizing the process of vote trading. By introducing a formal transparent mechanism with a cost function for votes, it might be possible to reduce informal coordination by introducing diminishing returns on purchasing EOS votes. This would maintain the ability of large token holders to have more sway, but avoid some, quote, vicious virtuous cycles of further EOS consolidation. Alternatively, such cost function could also be translated on the costs of casting a vote. Other previously suggested ideas to improve EOS are including random shuffle to choose 21 BPs out of a set of 100 largest BP candidates, introducing a universal inflation based on the amount of staked EOS, introducing negative votes and or a voting cap, introducing a proxy with Block 1 funds that votes according to community preferences for BPs, or introducing BP diversity guidelines to restrict the amount of regional concentration. These ideas are described in detail by EOS Geo. And so, conclusion. While Web 2 was defined by philosophies like move fast, break things, Web 3 should be guided by mantras like do it the right way this time. And that was by Andrew Keyes, Dharma Capitalization. This inspirational appeal of Keyes can more pragmatically be understood as a basic need to get the fundamental crypto economics right as soon as possible, and ideally before the inception of a network. This being said, it remains to be seen if EOS can overcome its very own structural problems. Unfortunately, EOS's vulnerability to civil attacks reduces transparency and thus make it difficult to have definite conclusions in regards to voting patterns of BPs and BP-associated proxies. Two rather unrelated issues that may, however, indirectly aggravate the situation of EOS governance are rising to dApps, or are relating to dApps on EOS. While EOS has manifold documentation for developers, only a few APIs are provided. The costly provision of APIs is completely voluntary and does not constitute any obligation of BPs. Simultaneously, the amount of EOS dApp users has lately strongly declined over the course of the last 6 months. This being said, the upcoming beta launch of Block.one's Facebook Voice is widely treated as a milestone for general adoption. While it is generally unclear to what extent collusion among block producers does occur, circumstantial evidence points to a problematic consolidation of the network that appears to be rooted in the fundamentals behind EOS. A governance with an intransparent, poorly understood voting market, aggravated by the use of a DPoS consensus system with incomplete incentive allocations. This problem is, however, not restricted to EOS alone, but appears to be an inherent problem of DPoS blockchains, and is generally aggravated by custodial ownership of tokens via exchanges. As the largest DPoS blockchain, EOS naturally encounters the highest amount of scrutiny and must identify and adopt pioneering solutions. Yes, I agree. It does need to do so, but it probably won't be able to with its governance style. The incentive structure is kind of goofy, I think, and it makes the possibility of gaming the system to one entity or one group of entities' interests entirely too easy, because it limits the number of participants that are able to weigh in, and to what extent the participants' votes actually have weight. Anyway, let's go ahead and throw back down with some music, and I want to get into a little bit of contortionist here, causality, here on Coin Metal. And that was Gizmochi with The Answer. And we're all hunting for that. Maybe one of these days we'll find it. I hope to. Anyway, it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else will do it for you. Not even the delegates you select. And so, as for our last dance, as usual, I've not picked one. And so, coming down to exactly which one to play is always a little bit of an adventure. Little fire under the feet. Let's see here. We've got about 4 minutes. Kind of limits our options. But I think this one will work given the subject matter of today. Korn, Blind, Last Dance here on Coin Metal. Thank you again for listening, and y'all have an excellent evening. Good night.